equally impressive is today's business news. Brian Quinn is here. He's impressive too. He's starting in China today. The government is retaliating against the EU and the US amid a deepening trade spat. Brian.
They are indeed, Stuart. Beijing announced it's launching an anti-dumping probe against the EU, the US, Japan, and Taiwan. In the crosshairs, a plastic called polyoxymethylene copolymer, commonly used in the manufacture of electronics and cars. Beijing also announcing sanctions on 3 American defense companies due to their sale of weapon systems to Taiwan as new President Lai Ching-te was inaugurated Monday. Those companies, General Atomics, General Dynamics, and Boeing Defense targeted. Those measures come in response to several EU probes into China's use of state subsidies to underwrite cheap exports that Brussels sees as a threat to Europe's industrial base. The Biden administration, meanwhile, has hiked tariffs on Chinese electric vehicles, solar cells, and metals as the West pushes back against what it calls overcapacity in the Chinese manufacturing sector. Beijing denouncing those moves. Take a listen here.
This is protectionism in the name of fair competition. The real aim is to contain China's new energy sectors, hamper China's high-quality development, and get advantage in the elections by competing to be tougher on China.
Well, meanwhile, the Chinese government is taking new measures to prop up its struggling real estate sector, Brian.
So Beijing is set to pump billions of dollars into China's crisis-stricken property market amid a raft of bankruptcies among the country's top developers. The People's Bank of China rolling out a $41.5 billion fund to help local governments buy unsold units and resell them as low-income housing. The central bank also eliminating the country's minimum mortgage rate and lowering the minimum down payment for both first and second homes. Chinese home prices fell for the 10th straight month in April. At 0.6%, it was the steepest fall in nearly a decade. Home prices for the first quarter were nearly 10% lower than they were a year ago. The real estate sector has been in crisis since 2021, when the Chinese government moved to reduce developers' debt levels, sending several into default. It is a major problem. Real estate once accounted for nearly a quarter of Chinese GDP growth. Here is the country's National Statistics Bureau.
We must process existing properties and optimise housing based on changes in the real estate market and people's expectations for high-quality housing. We must accelerate the transition to a new model of high-quality real estate development.
So is that plan then, Brian, providing any relief for Chinese developers on the markets at all?
A bit, you might say, Stuart. Investors, though, are comparing that $41.5 billion repurchasing plan to the amount of unsold housing stock in the country and coming up away less than fully convinced. Some large developers did see their shares rise a bit. China Vanke up nearly 1.5%. Hong Kong's mainland property index, though, down nearly 0.5%. The Hang Seng and Shanghai Composite each up around 0.5% as we head towards the closing bell there. Here in Europe, major indexes also trending higher following Wall Street's lead after the Dow closed above 40,000 points for the first time ever on Friday. Ryanair has announced a 34% rise in first quarter net profits over last year, along with a €700 million share buyback. Its shares gaining. London, Paris, and Frankfurt all up around 0.25% at the open there. But all investors' eyes will be on this Chinese property plan to see how it plays out over the coming months and if it will have the desired effect in propping up that heavily damaged real estate sector in China.
Brian, thanks very much. Brian Quinn from our business desk here on France 24.